Hey there, how's it going? It's Jonathan and welcome back to yet another video. In this video, I actually wanted to introduce you to a theory that I call active support and resistance lines. Now you might be wondering, what the hell is an active support and resistance line? Aren't all support and resistance lines active? Good question, of course, but this is something that I've been doing and something that I've studied and found out over the last several years when it comes to these sort of lines, is that some of them are going to have more of a chance of actually being considered active, and ones where the market's actually going to react to a support and resistance level over another one. So I'm going to introduce you to a concept that we would use to determine if a specific level is going to be more active than another. So that's all it is. It's more of an active line, okay? And that's one thing that I think it's going to help you in your study and also in your analysis when it comes to looking at areas of support and resistance moving forward. So I've got the chart package up, which we use Optima here. I'm just going to open up a stock, and let's just use Woolworths in this example. Now the reason why I'm using Woolworths is because we have a lot of data. It's a very fluctuating stock with very good trends. And I'm going to show you the steps that I do to actually find these active support and resistance lines. Levels, I should say, and the process that you might want to take to actually mimic the process that I'm using for this, okay? Now, a lot of people, when it comes to getting a chart up, is what they'll do is they'll open up a daily chart and then they'll start looking at like the last 6 months. And that's where they'll start to maybe get like a horizontal line or even a vertical line, depending on what form of analysis they're doing. And they'll start to just find areas and draw lines on the chart. And then they'll try and use that information and move into the future. Though what I want you to do is I want you to not get too far ahead of yourself. I want you, if possible, turn on any form of training mode that you have, whether it's TradingView or Optima or any other package you use. Turn on the training mode and move all the way back to the start of the chart. You don't have to go back to the start of the chart if you don't want to, if it's a really strong trending stock. But the reason why you go back to the start, and in this case the reason why I'm going to take you back to the start, is because it's going to give me an idea on how this stock moves. And the thing you want to do is you want to know how it moved in the past, because how it moved in the past is going to give you a good idea or understanding on how it's going to move in the future. No doubt sometimes the stock's vibration will change and it will start to move in a different way. Things that can change a stock's vibration are things like stock splits, new managements, new company direction, things like that. But if the company's history remains the same in the past and in the future in regards to what it's actually doing, then it can indicate that the vibration or the way it moves will remain the same. So that's just something to keep in mind. So what we've done is we've turned on training mode, we've headed straight back to the start of the chart. Second step, we're going to move this to a weekly chart. Now the reason why we're moving this to a weekly chart is because we want to filter out the noise instantly. So the noise is gone, and now we can start to analyze. Now on my training mode over here, on my training panel, I'm going to switch it to bar, because if I have it on day and I click forward, it's just going to give me new daily bars, and it's going to take me too long. So I'm going to switch it to actually bar. So each new bar that comes on is a week at a time. I'm going to make my chart just a little easier for me to analyze by changing the color sequence to swing relations. I'm going to make it just a little bit thicker, and then from here I'm able to start analyzing the stock. So the first thing I want to do is I want to mark current highs and lows, okay? So if we're going back to the start, we want to mark current highs and lows, and that's the first step. Okay, so very simple like this. These are current highs and lows, and they're important highs and lows because they are quite dramatic swings. And then we want to move forward, okay? Now I'm going to try and explain the market movements as we go forward, and I'll do this for several years. I don't want to obviously have a video that's an hour long, but I'll do this for 7 years just so that you can try to understand market movements and the psychology of the market at any specific time. So if we were to look at this bar right here, as we can see, we had this support level where the market moved up, it came down, the market breached the support level, it closed above it, came up, tried to hit this resistance level, didn't quite touch it, and then fell and broke through the support level. And as we can see, after it fell through the support level, the market moved down and now it's starting to trend higher. What I want to do here is I want to mark this level, okay, because it's quite a significant level. The market came up to this support level, which was in the past, and it started to act as resistance, so it was having trouble moving above it. It has now moved above it. It's fallen away. It's gone down to the last resistance level, so support level, getting mixed up. It did touch it for 1 week, and then it broke through it. It's gone up and hit the next support level, which was over here, which is now acting as resistance. So now what I want to do is I want to take this information and I want to start to find what an active level is. Now, I don't believe anyone else is talking about this concept. I think it is quite possibly only me in the sense of what an active level is. But in my understanding of the way that these markets are moving, an active support level or a resistance level needs to be touched at least 3 times. So when you've got this level right here that hasn't yet been touched yet, it is considered not yet a support or resistance level because we haven't got confirmation that it is yet a support or resistance level because it hasn't been touched. So when we have it touched once, when we have it touched twice, and then we move out and we can see it being touched again, that in my eyes is now considered an active level. Okay, now a lot of people say it only needs to be touched twice. I don't think twice is enough. So if we look at twice, well, we currently have 1 and 2, it might not be enough. So we want to make sure we get it at least 3 times, okay? So as we can see, we ran straight through it in the past, and now we're hovering around it. So it wasn't strong enough. Okay, let's move forward. We're now moving around our last active support and resistance level. All right, now we've touched this one 3 times. So this could be considered a touch. So these 2 levels, in my eyes, are now considered active. Looks like we're moving away from it. I'll just try and squeeze this a bit. Okay. If we go out, this one has been hit once, and it's now acting as support over here before the market fell through it. So that's now 2 times. And then 3 times. There we go. So this level is now active. Now, something you can do if you want to know which levels are active and which ones are currently trying to be tested to see if they're active, is go ahead and change the color. That way when the market comes to it in the future, you'll know if we're looking at an active level or an inactive level. Again, 2 touches is considered active against most technical analysts. I like to go for 3 because it gives me greater confirmation and clarification of that level. Now, it doesn't mean that the market's not going to push through it. If it's a strong move, it can definitely push through these levels, and that's good. We want them to push through them if it's bullish. Obviously, if it's bearish, we want them to provide some sort of support to the downside. So let's go ahead. We've come down to our active. You see we're using active lines now, and we've broken through it. Let's come down to the next active one. It's bounced up. Is it going to go down further? We'll wait and see. This is how you want to analyze the market and try to understand how it moves. We want to go back and move each bar forward and try and understand it, okay? So it's found a lot of support against our last active one. Okay, so this is what I mean. It can break through them if it's a strong run. That's what we want. Now we're getting some potential support against the last one. It's not currently an active support or resistance level. We've come down and hit our active level. I hope you're seeing how this plays out and why this form of analysis is a lot stronger than just putting lines everywhere, because we're getting clarification of what levels are going to be strong. So now that we've got some new data, we want to go ahead and pop on some new levels to watch in the future. Okay, we'll just see what happens here. Now you could go ahead and mark this. I'm going to mark this one because it is a significant decline, but I'm going to change the color to maybe red, and I'll also make it a bit thicker just as a level to watch. It's not yet determined or confirmed if it's going to provide any support or resistance. All right, let's keep going, keep adding those new lines. Now we could technically go ahead, excuse me, and add this one right here. Now if I go ahead and just pencil this in, this one, and this one would now be considered an active level. So if we were to use our prior setup, we'd go ahead and change this to blue, and that's one we'd be watching for potential change of trend if it came down and hit it. Again, no guarantee, but we'd watch the market. Okay, so it's come down and hit it and bounced off. Is it going to break through it to the downside? We'll have to wait and see. Let's go forward. It's coming down to it again. It's hit it. It's kind of bouncing off it. But that is our active level. All right. I hope you see how powerful this is. You see a lot of people drawing just lines every single place. We want to be getting the lines that are providing us what we would determine as active levels. I'm going to keep saying active, 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 because it's something that no one talks about, and I'm now going to show you how it works. We've got 2 hits on this one. We want to wait until we get an active level. Oh, we're running away. We can go ahead and draw a higher potential resistance level here. We had 2 tops, so it's not yet active until we get another confirmation. Okay, we're in a runaway market, so we keep drawing higher highs and the tops of those highs as support or resistance levels to watch for in the future. Now you could look for support and resistance levels to the downside, so if the market was to fall, this is quite a large gap range here, so we want to start putting in potential lows. Now you want to find the lows that are providing the most significant level of resistance. So it'd be up to you to determine what you think would be a suitable level here. I'm just going to place it here just for now because we've got 2 touches here with some congestion in the market here. Not yet active, but we'll wait and see. Wrong way. All right, so we didn't get the resistance level we were hoping for here to the up move. It's totally okay. It means we're in a bullish market, but I can't yet confirm that that's an active line. All right, there we go. We got another one here. Potentially we could confirm this whole move here as support. And there we go. So now I would now classify this one as an active level, and it's now one that I want to be watching. So I'm going to go blue. We're bouncing around it, bouncing off it. We've come down and hit this one. I'm now going to classify this one as active 2. And we'll see, are we moving higher or lower from here? Hovering around that level, around that one. So we can definitely see our active levels. And we've broken through it. Now is it going to act as support, or are we moving away? Moving away. So that's how you do it. We've currently moved into 2005. So I've just done around 13 years, and we've got our active support and resistance levels in blue. Not yet confirmed support and resistance levels in green, and then I've got a major one that I just marked here for some potential support and resistance levels if the market ever moved down to this level in the future, because it was a major decline in 1997. So that is the process that I use to actually go ahead and find these active levels. And I wanted to show you this because I have not seen anyone discuss it and walk someone through it this way. So I wanted to give you this. So if you want to go ahead and use this, if you want to go ahead and show other people how to do this, please just reference the source, which is myself, because I want to show you these skills, but I don't want people just ripping off obviously my analysis, because we work hard to try and analyze the markets. So at any point in time, feel free to use this. I'm giving this to you. I do show this behind closed doors, so I do show people how to do this in our courses and things like that. Not suggesting you go ahead and sign up to that, not at all, but I just want you to know that there is some skills out there that you can learn which are not yet publicly shown in books or online. So this is one I wanted to give you. Again, if you like it, go ahead and leave a thumbs up. If you've got any questions about this, easy, go ahead and leave a comment. And if you want to stay around, go ahead and subscribe. But not only that, I want you to go ahead and use this and tell me how you go. You can use this on any single market, whether it's Forex, whether it's stocks, commodities, even in the cryptocurrency market. You can use it, you can find these active levels, and you can go ahead and strengthen your analysis as you move forward with this theory. Talk to you soon.